This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
That's what brings the viewers back. That a boy.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
Well, hello, good morning, and welcome, everyone. It is Tuesday, August 26th, 2025, and this is the AgYield War Room. I am AgYield's marketing manager, everyone's favorite backup host, and award-winning swimsuit model, Jack Coakley. If you have any questions or comments today, maybe on what I just said, feel free to join the discussion. Post a comment anywhere you see fit. We're always answering questions and comments at info@agyield.com. Let's go over to Brian with some overnight numbers.
Thanks, Jack. Good morning, everybody. Sep corn, 389.5 up a quarter. Sep beans saw both sides of the market last night. Initially down 6, up to 8 higher, and then we ended up 7 higher at 1032.5. And then Sep Chicago wheat up a penny and a quarter at 508.
Thanks, Brian. Today, let's start with Justin, and then we'll get your thoughts, and then we'll throw it around the room.
Yeah, Jack, thanks. Nothing, I think we're kind of chopping around here at a lot of different moving averages. We've got obviously first notice day this week, so market's kind of trying to digest the recent rally, see if we can hold. Feels like there's quite a good change in ownership at these levels. You're starting to get back to some of the very first levels of where farmers either need or want to sell here. Beans have obviously had a really nice rally off the low. So I think we're getting a mix. We've got, we're continuing to see really good demand in corn, starting to see some really good demand in wheat. So I'd say corn and wheat specifically are kind of really priced competitively in the world market. A lot of that has to do with South America. We talked about yesterday, whether it's a combination of, the real making things, relatively cheaper for the Brazilian farmer to sell. So there's more hesitancy there. We've seen interior basis levels continue to go up in Brazil. So that's kind of a little bit of a head scratcher with such, large numbers that they have written down for the safrinha crop. I do think, eventually South Americans do, they do grow the crops to sell them. So they don't store nearly as much as we do. They might bag some things temporarily, but we will see some movement there at some point, but right now we'll enjoy the good business that we're getting. Obviously still, lots of talks about, China. There's an article yesterday in Brazil about, President Xi saying that, admittedly, switching some more business over to the US for beans. So there's, just kind of a lot of things that we're still trying to deal with. Soybean oil, for example, it's set back here this morning, again yesterday, just trying to still digest all that, the EPA decisions. I think there's still a lot of unknowns kind of dangling over the market. So we're in a transition period here where we typically make seasonal lows. We're going into harvest. We had pro farmer data. So I think the market's really trying to figure out, how's this finishing weather going to affect kind of final yields, and for me, like, what's the starting point on beans? We know that we have really good pod counts. We had great moisture going in for most of July, kind of a drier finish here, but it's also been cool. And now we have clients that are, kind of easing into fields, call it like central Illinois and south. So now I think we're kind of, the market's waiting to see what are we trading in beans? Like we talked about on the show, I think you could write a scenario for $1.50 or $1.50 higher or lower from this point, but there's still so many unknowns. So that's
right. Well, good stuff there. Dustin, let's shoot it over to you and get your thoughts.
Yeah, I mean, there's not a whole lot of news this morning. I think the overnight's kind of telling. We had this surprise increase in bean ratings when they were expecting a decrease, and stability in the corn ratings. So the initial reaction was lower overnight, yet the market turned higher by the morning. So, I think first notice day is still something to watch. Admittedly, there's not much weakness right now. So maybe that doesn't come. Maybe there's no forced selling that's on a wide scale, or it's oversubscribed. Like that could be a possibility. I think it makes sense that with the rising real, though, if anything's going to find support, it would be beans. And maybe that's a post-harvest thing, though, too, as a possibility that there's going to be a lot of need to raise cash, and the market's, kind of catching on to that. You have a 55-cent carry Nov to July. Some of these cash carries, it's like easy 50 cents to the first of the year in some parts of the country right now. And, yet it still exists. Why? Because there's a need to deliver beans at harvest for storage space and for cash flow. So maybe that's just what it is we're going into harvest. The expectation is high pod counts. Where are we starting at for national yield? Justin, you said that well earlier. We need to see how we finish out. We've never been above a 51.9 before. We're projecting a 53.6 right now, and the WASD report, and Pro Farmers at 53. Very possible to hit those types of numbers, but we still have to remember we only had 80.9 million acres of beans. It's an extremely low number, near record corn acres. That's what we planted this year. So with near $2 crush margins, with strong RVO guidance, I don't think it's a question why we've got such a high ratio right now of beans to corn. And I just wouldn't really be that surprised if things are going positively with China, that beans still could do something that surprises us. So I think the best chance for a rally would come from beans, my personal opinion, if we're going to get one at all. I mean, yield's going to determine that, but I think beans have a much tighter balance sheet than corn does.
And I just add to that too. I mean, the ratio's high relative to where it came from. It's really kind of middle of the road, especially when you're looking at a 2.5 something. So it's not even extreme. It's just high. It's just recently moved a lot. So I'd just like to add that in there. I mean, if you look at the acres number, to your point, Dustin, it would suggest probably a higher ratio.
Yeah.
And as you go higher, you incentivize, more acres. And, now we have two hemispheres, the southern hemisphere now being bigger. So when those ratios get higher, like in the, May, July contracts, you incentivize more bean acres. The problem, in my opinion, with the ratio saying, oh, we're just gonna get a lot more bean acres in South America. Yeah, but they've gotten so good at, this is how they plant this many bean acres, and then they plant this many first season corn, and then the rest is safrinha corn. They plant both of them on so many acres now. So I'm not sure that's a great argument. I think the biggest thing hanging over is China. And if you look at basis levels, you've got really good basis levels, relatively speaking, for soybeans on the eastern belt along the delivery system, Mississippi, Illinois. But the farther you go out west, basis levels are horrible for beans. A lot of that because it's being derived from the PNW, which a lot of that goes to China. So with PNW being quiet, you're seeing $50, $70 plus unders for beans out in the area where they've got giant pod counts, had the best weather. So you're going to see an extreme range of basis levels, whether you're Ohio, South Dakota, and in between. And I think the market's trying to incentivize, okay, we've got huge carries on the board. You talked about in the letter a lot. You've had Nov July at almost very close to full storage for 7 months on the board, and then you throw cash carry on top of that. You're getting to levels where the market is incentivizing, go buy a bagging system, go put up storage, go put up flat storage, go tarp something. I think you get, the wider you get more and more participants willing to make an investment or figure out some way to make that carry. And I think that's what the job of the market right now. Eventually that's going to whether it's today, whatever, it's going to over incentivize that. And then you'll see, all of a sudden crushers with big margins be like, wait a second, like I got to get a little more aggressive here to get supply.
Certainly. Brian, I saw you nodding your head there. Did you have something you wanted to add?
No, I was just going to ask Justin a question, but he answered it as he was speaking. I mean, does that lead to believe that more guys will be storing beans, you think, this fall, just with all the news that could come into fruition?
They should. I mean, the incentive is there. I think for a lot of reasons, some people don't want to do the work. Some people don't like to store beans. Some people need money. All sorts of different reasons why, like I've said, the trend for the last 5-6+ years has been sell a big chunk of beans off the combine to pay bills, store corn. It's easier to store corn, more comfortable storing corn, but the incentives are so big now that I think you're going to incentivize more and more people to figure out how to store both if they can. And you might see versions of, basis only contracts to free up cash, but still have ownership. You're still fighting the carry in that example. So to have physical ownership yourself and store it, I think you're going to see more and more of that. It just depends on, how like I said, how much incentive do you have to be where someone's like, okay, fine, I'll do it. I'll go figure out a way to do it.
I think the reluctance to throw beans in a bag on the ground too is high for a lot of people.
It is. I think if you have, let's say you have some on-farm storage, a bin, maybe you put beans in there and you figure out how to put corn in a bag. I mean, the more incentive there is, the more obviously there's incentive to go find ways to do it.
Certainly.
Or to get creative on how you do it. So I think it's going to be people that want to work really hard and try to figure out ways are going to be the ways to earn money in a really low margin environment.
Very good, guys. Any other grain-related items before we move over to Ryland? Ryland, what's on your mind?
Well, it's kind of a wild trade yesterday again. Obviously, you got a little bit of a negative reaction to the cattle on feed report, and you put screwworm in the news. Even though it didn't have anything to do with, the cattle situation, the market still reacted really aggressively, just right on the open. I mean, feeders prices came back. Sorry about that. So overall, the news is pretty friendly going into this week. If you just kind of sweep the cattle on feed under the rug here, we got beef prices back up, and you got the kill starting to ramp up a little bit. Packers have some margin to spend, so it just really feels like that is where the focus is really going to be if they're going to try to pay up here for some cash. So that really just overall kind of hammers home that it's going to take a lot to really kind of change this longer term trend overall. So just watch for that. But on the hog side of things, you had kind of an inside trade, just couldn't quite get past last week's highs. So overall, the cold storage report, I think, was generally pretty friendly overall, just with the bigger than expected out movement. Plus, just the corroboration is still relatively tight freezer supplies. So I think going into this time of year, I mean, it is the tail end of grilling season coming up this weekend. It should be over. And at this point, still waiting to see a little bit more down in carcass and maybe some cash weakness as well. Cash was about $2 lower yesterday, so that's likely to bleed into us today right now, but that's really, I think, where the focus is going to be on that kind of seasonal drop right now. We do have the discount posted, or at least here on the board, but at least the rally last week likely drawing out some hedge pressure, so open it just was kind of creeping up here. So seeing maybe get a little bit of follow through here to the downside today, but still going to be watching cash and carcass as we kind of get past next week.
Man, microphone issues from Ryland, and Ben wasn't even here to rub it in.
I know. I just I'm taking up his mantle.
Yeah, I'll let him know. I'll shoot him an email after this. Anyway, I think that'll do it here for us today. If you enjoy watching the show as much as we enjoy putting it on, give us a like or subscribe. Helps us out with the YouTube algorithm, gets our show out to a larger audience, lets you know when we're going live, when episodes are coming out, and it just keeps you up to speed on everything we're doing over here at AgYield. So thanks again to everyone who supports the show. We're doing this show every day that the markets are open, live on X, Facebook Live, YouTube Live at 8:15 Central Time. Appreciate everyone's thoughts and comments today. Dan will be back and I'll return to my hidey hole in a cave where I just click buttons and make the live stream turn on. But it will hopefully be back soon. So with that being said, everyone have a great day, and we'll talk to you tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.